I'm fortunate enough to be sitting with Dr. James Thorne, who is the Chief Investment Strategist and Chief Economist here at Wellington-Altus Private Wealth. Um, Welcome, Jim.
Simon, how's it going, man?
It's excellent. It's excellent. So 5 years ago, around this time, not
Wow.
like 5 years ago, 2020, the first webcast I ever did was with you, and we were talking about the investment opportunities that were around the COVID collapse, and we were right at the bottom.
Yep.
And since that point, at that point, we were saying what an opportunity it was as far as investing was concerned. And the market's up about 200% since then. So, um, what I'd like to talk about today is what the Trump administration means to the global economy. With Trump coming in, there's a lot of changes that are cultural, there's a lot of changes that are social, and a lot of changes that are economic. And I want to focus on the economic impacts and the market impacts. Trump's proposing a lot of changes, and he's kind of coming at these changes with an overarching philosophy that is very, very different than the Biden administration and very different than any administration that we've seen in our lifetimes, or at least I've noticed in my lifetime. Could you talk a bit about the difference in the way that Trump is approaching the economy and the markets versus administrations before?
Sure. So when you talk to some very old sage veterans from Wall Street, what they say is we are right now experiencing possibly the biggest vibe shift in 50 years
Mhm.
in terms of you glanced over it, but let's think of it. I'll start off in an economic way. We're moving from a period of time where liberalism dominated or where Keynesianism
Mhm.
dominated. And we're moving back to the center. And we're becoming much more of a libertarian society. We're moving from Keynes to Milton Friedman. We're moving from a big government who determines the winners and losers to small government, and we're introducing the invisible hand, the private sector, animal spirits. We're in that transition period. And that's why people say it's so profound. And that's why when you and I talk all the time, we talk about when have there been times like this? World War I, World War II, 70s into the 80s. Like these are big shifts. And if you can understand what is going on, it allows you to look at what's going on from just a little bit of a different perspective, and hopefully it gives you some clarity. So that's the big step. And what you should expect is you should expect those in power, and let's say the Fed or in Wall Street, that adhere to the Keynesian way of doing things, to label Mr. Trump's policies as extreme, where if I took you back to the 1980s, it was the going policy. Milton Friedman was all the rage after Jimmy Carter, after Ronald Reagan got in, and you pivoted, and we all became Milton Friedman. It became the University of Chicago. That's where all the Nobel Prizes were won, not Yale, right? And James Tobin and Keynesianism. That is the big economic shift. So how do we navigate this situation where we've seen this before? I mean, as you talk about Elon Musk and Doge, well, Al Gore did this in the 1990s. He did exactly the same thing. When you talk about Trump laying people off, well, Bill Clinton gave 300,000 government employees, I think $25,000 to $30,000 to lay people off. All Trump's doing is what Gore and Clinton did in the 1990s, but we all get freaked out saying, oh my God, this is extreme. But if we would just stop, put the phone down, and go back and absorb and look at history, we sit there and go, we've seen this before. And remember, after Gore and Clinton did this in the 90s, there was no deficit by the end of the 1990s. And everybody now is saying, well, this never been done before. Simon, not only has it been done in our lifetime, it's been done at the very beginning of our professional career, and the majority of people in our business don't recognize this, and the majority of people of society don't recognize this. But that is exactly what's going on. And so if you look at the policies, not perfectly, and remember, let's take Trump seriously, but let's not take him literally. Okay, so yeah, he's hard to take. But really, the economic policies they're putting in were the same policies that were there in the 80s up until 2000. And then Bernanke got in as the Fed, and then we had all of this, the Keynesianism started. So we've seen this. It's not extreme. It's leveraging off the private sector. It's leveraging off animal spirits. The private sector is going to pick winners and losers, not the government. The government's not going to determine what battery company is in Canada, right? They're not going to tell us how to drive cars, right? They're not going to tell us whether or not we can buy Bitcoin or not. They're not going to allow banks to be protected, and they're going to allow blockchain to evolve. As Schumpeter would call it, we're in a period of time of creative destruction. And if you understand that, then everything becomes much clearer.
You've covered a lot in regards to the shift in philosophy and economics, right? And really, you've covered a lot between the way that government has before taxed and redistributed money, social programs. Now we're moving from that to big business dominating the landscape. One of the big changes that's coming down the pipe is a change in regulation for a lot of industries. How is that going to impact the overall market at this point?
So, but going back 50,000 foot, the United States and China are in a technological arms race. And there is no longer going to be what the fancy term is regulatory capture by these big companies that are going to be protected and not allow innovation to naturally evolve within their companies and industries. So in the 90s, the internet came around. Amazon was allowed to basically apply creative destruction to the retail space. When blockchain came in, regulation was put in place such that banks were protected. That's no longer going to be the case. Trump signed the executive order. You look at AI, there's no longer is the administrative state going to hinder the evolution, rightly or wrongly, of technology because of the fact that the country that wins the AI race, the country that controls blockchain, controls the game for the next 100 years. And once you understand that, then it becomes much clearer. I don't know who the winners and losers are going to be. But what I do know is that the government is going to step back, and Trump has said, we're open for business. We have to evolve because we're in a war, an economic war with China, which was no different in the late 80s with Japan. We've seen this before, right? If you go back to the 80s, it was Japan was threatening the United States. It was Sony, the Walkman, right? They had all the chips, right? They had the cars, right? And then they unleashed the internet. Microsoft learned we got the operating systems, Windows, and then all of a sudden we started to innovate. I mean, think about, it's interesting, Simon, because I can remember corporate America and Canada pushing back at introducing the personal computer into their businesses. How often are you on Zoom? I started out in this business and there was no internet. And the problem is we take it, the majority of people right now take everything, the innovation that we've got, for granted. right? Elon Musk is now landing a rocket on a pair of chopsticks, and we take it for granted. Really? No, but so it's not an argument, right? I'm just saying this is the way it is. Let's build portfolios. Let's not argue. Let's use it to our advantage that the majority of people in society are clueless on the generational changes that are happening. And yeah, I mean, a day does not go by where I have to, you know, people say, oh my God, Mr. Trump or Elon Musk. And what's the number one rule of investing? Check your biases at the door. And the number two investing rule is look out 5 to 6 quarters.
So one of the big shifts that is happening there is a shift towards companies that are going to be developing innovation and disrupting the economy. But on top of that is that a lot of companies have been held back because people have been worried about monopolies. People have been worried about a lack of competition. Now what we're going to start seeing is the ability of these companies without regulations to compete on a level that they were never able to compete before. And that may well affect the development of monopolies, and that companies that are powerful becoming even more powerful. Thinking about the banking sector, something a bit different. There's a lot of innovation in the banking sector as well. But thinking about the banking sector being able to consolidate business by buying smaller regional banks in the United States, which is something different than what we see up here in Canada. Here in Canada, it's the big 6 banks. In the United States, there's hundreds of banks, but a lot of them been protected by their regions. This lack of regulatory oversight, is that going to impact the competitive positions of some of the major players? And will there be a wave of acquisitions? And what are your thoughts on that?
Well, the way as I get older, I get a little bit more cynical, right? And I really don't think that Mr. Trump is coming after Canada in terms of tariffs because of cheese and milk to protect the Wisconsin farmers.
I'm not
No, I'm
coming at
saying
this
I'm
from
not.
a Canada.
No, but I'm
talking about
saying here,
US
so in Canada, you've got industries that are regulatory, that are protected,
Oh, I see. Yes. Yes.
right? And because they're protected, they don't really need to innovate, and they're not highly competitive. And
Right.
sorry to say this because I lived outside of the country for like 20 years. The whole world knows this. So the Canadians have got to get with the program. They've got to stop thinking that for some reason we are different than everybody else. We got lucky in the global financial crisis.
Yep.
Okay? So we need to have deregulation up here. That's one, and everybody knows it. And two, it really, what you have to do is keep an open mind and recognize the fact that they make a decision, they put in a strategy in place, they put in regulation in place. They don't think through the unintended consequences completely. Decades go by and they sit there and go, oh, so for example, in the United States, banking at the local level, that's not, and Canadians think because they go to New York and Washington, D.C., they know America. That's not America. Okay? America is a small, Harrisburg, Pennsylvania, right? It's these small company, they have these regional areas, right? We don't really have a regional diversification up here. But what I'm trying to say to you is credit creation in the United States happens at the local level through regional banks. And rightly or wrongly, after the global financial crisis, they came in with Dodd-Frank that basically stopped the ability or the desire for local banks to create capital. So are we surprised that Main Street is taking it on the chin and there's an increase in income inequality, right? The new Treasury Secretary, Mr. Bissett, comes in and in his testimony he says, look, The top 5 banks in the United States have too much market share. We need to deregulate. We need to think and look at Dodd-Frank because we need to basically get regional banks, the small banks that lend to Main Street, to get the smaller grassroots economy going. And you do that through banks, right? And so you come back and you say, that's him talking. And he's absolutely right. Right? So think about that was legislation that was put in coming out of '08. They weren't thinking about in 2025, there's nothing happening in regional banks and there was no mergers and acquisitions because you couldn't take the bank over and you couldn't close it. You couldn't fire people. There was no innovation. So if there's no innovation and there's no mergers and acquisition, guess what happens? Nothing happens. No lending happens. Should we be surprised that there's a rise of income inequality in middle America? No. So that's what's going to be under the Trump administration, or at least the Treasury Secretary. And he's right. And it's been known forever, right? I don't know why Biden didn't do it, right? I don't know why Obama didn't do it. I'm trying to be apolitical, but I'm saying he's there. He goes, boom. And so then you sit there and go, are Canadian banks going to be allowed to participate? Given the recent news, I would say no. You get my drift? And if that's the case, then in Canada, because of the legendary home bias that everybody in the world knows, if we were sitting here in New York City managing global money, we might have max 3%. In Canada. Actually, when you go, it just came back, 1% is the level they're doing it. The average Canadian has 53% of their RRSP in Canada. And the question I always say to you is, like, why do you guys act any differently than the smart money global? And you can invest anywhere in the world. So what edge do the Canadians have that they have too much exposure to Canada?
I think that's one of the great things about working with you and being in dialogue with you on a daily basis, practically, is that I looked at a stat about $1 trillion has fled the country. That about $1 trillion in foreign direct investment has left over the last couple of years. And then I look at my own portfolio, and through our dialogues and through the positioning that I've taken my clients, the vast majority of our assets are outside of Canada. And I see that a lot of advisors that are in the know have been leaving Canada and have been putting less and less money into direct investment in Canada, just simply because the opportunity set here is just so truncated compared to the rest of the world.
But does that surprise you?
It doesn't. It doesn't surprise me. But what are we doing to address this? And is anything being done? And what is the future of Canada, especially with tariffs and all kinds of different threats coming from south of the border?
Well, first, if you're not going to make an economy that's as friendly to capital, it's going to leave. Second, if you're a manufacturer and the number one input that you have into your manufacturing process is cheap electricity or energy, why would you go to an economic area that basically is taking their God-given gifts and basically being the only country throughout COVID that is increasing the price of electricity? Why? Bissett talks about it in his testimony. When they ask him, the Green New Deal is dead. And here's what the Americans are thinking. And when he was asked, he goes, can we be frank? Simon, can we be frank? China is growing at building 100 coal-fired generation plants. China is building somewhere between 10 to 15 nuclear reactors. China gets this. China understands that in this new digital economy, that economy that has the cheapest electricity wins. Okay? So now you and I are sitting in the Caribbean or in Europe or whatever, and we're going to sit there and look around to build a plant. Why would we come to Canada? Why? Why would you come into an area where Ottawa doesn't treat capital well? Capital is global. Canadians have got to wake up and smell the coffee. It's over, folks. It's over, right? You know, when you sit there and go, it's funny when you start hearing about the tariffs. When you sit there and you listen and it to politicians that have been in power for decades, who shut down the development of pipelines and energy to diversify our client base, are now sitting there and focused on Mr. Trump? I mean, really, really. I'm not going to name their names, but it is comical, comical, right? So let's go to the tariffs, right? And it's kind of weird because this is possibly going to um, air after after February 1st. So everybody's freaking out around here,
Hmm.
right? Ooh, Trump. Okay, and then let's look at the trade relationship between Canada and the United States. Okay, if you take out oil, which they need, the U.S. has a trade surplus with us, not a trade deficit. We buy more finished products from them than we do from us because, Simon, let's be honest, we don't make anything up here that they want. Sorry, folks. Okay. So, and they need the energy. Okay. So what happens? Well, the Council on Foreign Relations talked about this. This is out there for, I would say, half a decade. Canada and the United States need to become more economically integrated. And we're not. We have become less integrated. Canada needs to eliminate interprovincial trade barriers. So is CBC talking about that? How about Justin? Is the Trudeau's and the Liberals and the NDP talking about it? Or all they are doing this whole tariff thing with Mr. Ford because they're trying to throw red meat over here and they're going to try to do what Harris did in the United States and run against Trump. Hey, Mr. Ford, you have 7.5% unemployment. That's not Mr. Trump's fault. I mean, I got a lot of problems with Mr. Trump. You understand? But this is what's going on. So why have I said from the get-go when we've met, Canada needs to have a tough, honest conversation with themselves. Our economy is unbalanced. We don't have a significant manufacturing base. Interprovincial trade is not free. We have not developed the natural resources that we need. We have applied a Green New Agenda that nobody else in the world has done. Why are we taxing pollution when China and India are going full throttle to make coal-fired generation plants so that they can have cheap electricity so we can buy stuff from them? And we're surprised about it's difficult to get a job? Like, can we just stand back and smell the coffee? So that's why we say get out of, this isn't my job when we talk, is we need to come up and build a portfolio so that your clients can achieve their financial goals, whatever those goals are, whether it's growth, capital preservation, what have you, right? That's your job. My job is to sit there and go, Simon, that's a really difficult thing to do. You're doing a great job. It's easier if you look to the United States to do that. You could possibly do it up here, but it's really, really hard because of the environment that we have up here. And two, there's not many companies that you can achieve that with. Now, could it change? Sure. We've been blessed with natural resources. Are we going to embrace it? Remains to be seen. But I think what I would be clear to you is the other generational shift that happened that we need to look at with the United States, because it's happening here, is there is this theory in politics called the exclusion of the center. And what that is, they'll come up to you and go, Simon, you're a candidate to get elected. Simon, we want you to go with these extreme policies to get elected. And then once you get elected, you're going to govern from the center. Ever since Obama got in, you go out, say you're moderate, and then you get back in and you go to the extremes. Right? So Trump is doing just exactly what he said he was going to do. So now we have the liberals basically saying, well, we're going to scrap the tax on carbon. We're going to scrap the capital gains tax. Now that you're gay, we're having an election. They're going to change their ways. Well, I don't know. I remember the last election. They said these things that they put in place when the liberals went extreme left, extreme progressive left, they didn't run on that platform. They ran on a centrist platform. Do you trust them again? As I analyze a company, I don't. Now, maybe the Canadian electorate does. I can tell you one thing, though. The rest of the world, they're not buying it. They don't think Mark Carney is an outsider. You know what I mean? And so much in our business when you're valuing assets, it's the flows, which you talked about. I don't see flows coming back. I can see a situation where Canada is a great place to invest. But there's a lot of people sitting on the sidelines say, first time, I'm not getting fooled again by you guys, right? I mean, nobody believes Mark Carney in terms of his carbon, we're not going to do a carbon tax. Nobody believes. When I was in New York. You think they believe they're talking of the capital gains that basically attacks capital? Why would capital leave when you're basically attacking it and taxing it? Let's look at Ireland. Ireland went from the sick man of Europe to having a per capita GDP half 50% higher than the United States. You know what they did? They made it an attractive place for capital. So either we are or we're not. We live in a democracy. We'll find out.
Yeah. One of the amazing things about one of the great things about talking to you, Jim, is that you're asking questions, you're answering questions that people haven't even thought to ask, which is great. When it comes down to it, one of the great things about where I sit is that I deal with many different people and many different families. And just some observations from the trenches. I have 4 clients that have Canadian educated children that work at Tesla, Google, and Apple right now. They live in San Francisco and they live in Texas. And it's amazing the lack of opportunity here, and that our system is educating people and paying to get them educated, and they're leaving. So
You're looking at one. I got my PhD here, right? I went to the United States. I got educated. I got my PhD in Canada, but I got 20 years. It was great. I would not have had the opportunity here. Right? There's 5 guys, right? I joined a Warren Buffett bank. We did 7 mergers. I got the education of a lifetime. And I came back to Canada 5 years ago to grow Wellington, which is an independent platform, so that we can have honest conversations. Now, and the folks that are listening you have to understand. I'm giving Simon my unbridled, unvarnished point of view. He can disagree with it. But what you need to understand is these are the conversations we have. And so when he's building the portfolio for you, we're having these conversations. He might say, I don't agree with you. I think Trump's such and such and da 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 da. But at least what I can say to you honestly is this is how research happens. And this goes back to what I say is the Overton window. We're moving back to the center, where I'm going to sit there and say, I don't think Milton Friedman is extreme. And I think if we're going to talk extreme, Keynes is extreme. And what Yellen did over the last 4 years was more extreme. You can sit there and say, I agree or not, but we're getting back to that time where we are allowed to talk about diverging theories, science theories, social science theories, and not label them as extreme or fake news, which is the last thing. When I came back from Canada, from the States to Canada, I am totally blown away that we stopped doing that up here. That was one of our core foundations that allowed us to be different in this world. And we have lost what it, in my personal opinion, I used to listen to a guy named Peter Zofsky on CBC radio. It was much listened. We had Dalton Camp, okay, far right, Eric Cairns, center, and Stephen Lewis, left. And we talked about issues, and I would listen and I would learn. And nobody with Dalton Camp wouldn't say to Stephen Lewis, you're an extremist. Look at the dialogue we have up here. Look at how Trudeau and the NDP are trying to paint Poilievre as an extreme, right? We are completely and totally behind this vibe shift that's going on globally, right? The horse is out of the barn and down the road. So what do we get to do? We get to talk about it. I don't think our competition's talking about it. And you can build portfolios knowing that we've just chatted about it. That's about it, man.
So it's interesting because a lot of the social and cultural differences that are coming from the change of administration is they're interesting and again not to be discussed in this platform here. But when it comes to the economic shifts, it's kind of like uh, the frog is in the boiling water and is being taken out, and a lot of people are shocked that things are changing as much as they are. But I think that soon there's going to be more and more of an understanding of the changes that actually need to be made.
This evolutionary process is going to happen. We're moving back to the center. We're going to allow the private sector to pick winners and losers. Animal spirits are going to come back in. Interest rates are going to go a heck of a lot lower than you think. And Canada is behind the United States, and Canada has a period of structural adjustment that may last a decade. It's that much. It's that much. The wood that we have to chop is that much, right? What happens if the Canadian financial system is no longer protected and Canadian banks have to compete against money-centered banks in New York? And here's Mr. Trump's call. And I don't know anything, but wouldn't it be commonsensical for these people to sit there and go, but so let me get this straight, RBC. You can come down to New York and compete in my backyard, but I can't come up to Toronto and compete in your backyard? Is that reciprocal? Is that fair?
This is the big opportunity of the time to see some shifts here in Canada where we're going to have to work to improve. Myself and the portfolios that I manage are focused mostly on the United States, just simply because to me, from my eyes, that's where most of the opportunity seems to lie. When it comes down to where you think the market is going, and if you were going to game out where the market goes this year, where the market goes next year, where the market's going in the next 5 and 10 years, what would be your thoughts?
We're in an innovative, so we're in a demographic phase, a cultural phase, and an innovative phase that looks a lot like the 1990s, but only bigger. So I would suggest to you that over the next 4 years, let's say to the end of the decade, right, we're in a secular bull market where innovation leads. But what this does, because we're talking about new companies and new industries, valuations are going to look wacky, just like they did in the 1990s. And that's okay. And I would suggest to you by the end of the decade, we're most likely going to be in a bubble, right? Because we don't know. This is exactly the same as the railway. We're going to build all these railways. We're going to throw a ton of capital at these railways. We're going to think the market expands, infant to infinity, and it doesn't, it'll finally reach to that point where it stops. Valuation matters. And then, there's going to be a lot of companies that are overvalued. And then valuations will matter. So that is waiting for us downriver. Is it 4 years? Is it 6 years? It's waiting downriver. I don't know how fast we'll get there. So what I'm saying to you is, in near term, the risk is going to be that, and it's not so much in Canada. So between Canada and the United States, Canadians need to delever their balance sheet. So the interest rate cuts that the Bank of Canada is doing right now is going to be used to pay down debt, not increase more goods, which means Canada's growth is going to be anemic for a period of time, just like the United States after the global financial crisis. The fancy term is balance sheet recession. The United States is completely different. And the reason is for that is because even though there's excessive levels of debt, the consumer has delevered because they were forced to delever after the global financial crisis. The risk is, though, in terms of they're losing because the Fed is so tight, and I think the Fed is possibly the last bastion of excessive progressive left ideology. They're Keynesian, okay? And they're concerned, not me, this is what Powell said. They're concerned about Trump's policies. So let me just be honest. I hear they're political. He can say he walks like a duck and quacks like a duck. It's a duck. When you're sitting there and the Fed is basically should be cutting rates and they're not because they want to wait to see what the policies are for Trump. And we know that tariffs are not inflationary and deportations are not inflationary. And oh, by the way, Clinton deported, Obama deported. This is not a new strategy. This has been done before, right? Same thing with, like I said, Al Gore, right? They've done all this before, but yet Trump is being late. It's the Trump derangement syndrome, right? Ooh, it's inflationary. Well, it's not going to be. When the Fed cuts, the consumer will respond to it, unlike up here, because they don't have to delever.
Mm-hmm.
If the Fed cuts, then the housing market supply will increase. When I was living in Washington, D.C., I had a 30-year mortgage at 1.75%. Let's suppose my wife and I were in the same house and we wanted to move right now. We would have to pay a 7% mortgage. We're not moving. So what's happening? If you look in Florida, inventory at levels not seen since the global financial crisis. Where is there no inventory? In the Northeast. Why? Because everybody is basically locked into their house and they can't move because they can't afford a new mortgage, right? They can't afford to move, right? So what are they going to do? Fed will bring rates down and the United States should respond nicely. Short term, though, rate cuts take about 2 years to kick in. They're not cutting rates right now because of Trump, which I say is political. It takes 2 years. So the Fed, and Powell says, is about 150 basis points or a percentage and a half too tight. If he doesn't cut, and Elon Musk starts gutting the government and government spending goes down, then we're going to have a hard landing in 2026. You got to put it on your bingo card. And so I think we're great for the decade. I think we're good for this year. But that doesn't mean we can't have a significant drawdown. And remember, let me just qualify it. And when we talk, right, I always say to you, expect a correction of at least 8% every year. Normal, natural, and healthy. Expect it. 26, because it's a midterm election cycle year, if you go back to 1920, typically that drawdown, right, or that correction is bigger. And the reason why it's bigger is because what happened this past year? Joe Biden spent like a drunken sailor to try to get elected. All of that spending still works through its system until like halfway through 25. And then the government spending drops off like a stone. There's an air pocket in economic growth, and everybody freaks out the following year because the economy's slowing too much and the Fed is behind the curve in terms of cutting rates, stimulating the economy. That's what waits for us in 26.
So I'm really glad that you did touch on that, because even though we're looking out, if I think that when we're looking out 5 years, 10 years, that this innovation that we're seeing globally is going to be amazing. It's going to be great for markets. I think that a lot of what we're seeing, again, I'm focusing on the States because that's where I'm investing presently. To see mergers and acquisitions happen, deregulation, lower taxes, there's a lot of positives. But the thing that is also important for people and critical to understand is that volatility is here, and that it's always going to be here. And there's going to always be a moment where things go down and everybody starts to be afraid. But that doesn't mean that the game is over just because the market is going up and down.
We just experienced it with this DeepSeek thing.
Just last, yeah. So
Right. I mean, you guys, do we all check our brains at the door and forget about Sino-Forest? We've got this Chinese company coming out saying they've cracked cold fusion, and everybody sits there and goes, we're not going to, we're not going to build server farms, and we're not going to, so let me get this straight. We're going to do autonomous driving with a $5,000 AI program. Really? Really? Right? And we're not going to need to build nuclear reactors, and we're not going to have to, we're not going to have to be, get cheap energy. I mean, people just check check their brains at the door. But that's, if you understand that's going to happen. And what do I say to you? The smash and grab narrative is going to happen in 6 months. In September, we went through the same thing when NVIDIA pushed out the production of their new high-end product by a quarter because they were getting better yields. That means higher margins. And what was, AI is a bubble, it's popped, and blah, 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 and they bomb it, right? It's going to happen again.
the thing that a lot of people always need to understand is that traders make money when the market goes down, just like they make money when the market goes up. They need the market to go up and down in order to make as much as they can. So that ends up what happens. So,
But if you know that that's the ride we're on at the CNE, up and down and volatility to shake to freak people out, then you use it to your advantage, right? What do I always say? Use the vol to your advantage.
yeah, that's what we try to do.
That's what we do. Yeah.
We're going to be wrapping it up really, really momentarily here, but do you have any final thoughts, or is there anything that you want to express?
I think what you need to understand is that President Trump is anchoring off of the 1800s. And he's anchoring off on an economic model called the American system that was developed by Alexander Hamilton, where tariffs were used to generate revenue and protect industries. And I think the Americans are going to go ahead and do it. And then let's just add the overlay, which is going to be Trump is going to use it as a negotiation tactic and freak everybody out.
Yeah.
But I would expect to sit there and see if you're not going, and this is why it's so important for us in Canada to get down there and negotiate, so that they're going to sit there, pick a number X, I don't know what it is. They're going to sit there and go, look, we can't sell our cars to Europe. So we're going to put on the same tariffs that Europe puts on us. That's reciprocity, right? But it's not inflationary. Only 25% of the products that people consume in the United States are imported. Only 25%. And if they slowly, gradually put up to a 10% tariff on those products, they'll generate revenue, and it won't be inflationary. And then what will it do? as people come and companies bring their manufacturing processes to the United States, it increases the level of income for the people in the lower end, and it reduces income inequality. This is second-year macroeconomics. So it's going to be labeled completely different by the globalists, right? They're gonna say, "Oh my God." Well, no, this is what they're gonna do. And so what will that do? That will reduce taxes charged, which will create that perpetual motion machine to make America more attractive. While we're raising taxes on capital and making it less advantageous for capital, Trump is doing the exact opposite. I would suggest to you that everybody is going to be forced to follow suit. That's what I think the evolution happens over the next 4 years.
I think it's interesting. Just as a side note, I remember in the early 2000s reading essays by Warren Buffett talking about how China was by buying all of the goods from China that we were that the United States was basically sending all of its capital out because it was giving profits to Chinese companies instead of having business work in the United States. So I think that if to end on a note of hope, it's that the U.S. will end up with more jobs for its own people, will be able to have a bit of a renaissance economically, and that when things like COVID happen and there's problems with supply chains, that it won't affect them as much because they'll be able to make their own equipment. They won't have to worry about global supply chains as much as they do right now. There's a lot of positives that can come out of reindustrializing the United States, and there's a lot of lessons for us here in Canada to learn as well.
You call it reindustrialization, is reprivatization, and a lot of people are calling it the Gilded Age, the new Gilded Age for the United States, or the new Golden Age.
Yeah.
And so as long as you understand that's the evolution, I think that's the evolution that's gonna happen. And the American people have spoken, right? He won the battleground states. He won the popular vote. He's going to implement this strategy. We can argue about it, whether or not we like it or not. But my job is to check biases at the door and to say, this is where I think's going, build your clients' portfolios accordingly.
Great. And that's exactly what we'll do. So thank you very much, Jim, for joining us. And I look forward to the next time we have lunch.
That sounds great. Take
All right,
care.
thanks.